And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge Show, the show where we put you in front of where the action is. And as always, with an eye toward helping prepare you get set up for not only next week, but beyond. So let's get started. Lots to cover as usual. Today, we're going to dig in, take a look at where the markets are. Again, to give you a sense of whether it's safe to jump back in. We did see that pullback last week into this week with high growth, so we'll go over all of that. Also, we saw the Dow Jones Industrial Index lead for the week, pointing that out because I did go through those 30 Dow components and have cherry picked more than a couple of names in there that you should at the very least be aware of. It's all about that recovery play, of course. And then recently winning stocks, they are uncovering and coming up to what I call resistance. And those are going to be those big winners that are attempting to reverse. We're going to take a look at a couple of those stocks so you'll know what to be on the prowl for to go ahead and potentially get back in. Small caps came roaring back up over 7% on the week. I have some names and areas there for you to focus on. And then REIT stocks. This is all again about that recovery, second best performer this week, up 6%, all about recovery hopes and the lack of defaults, if you will, on the some of these different areas. So that's I'm going to focus on three different areas and some select names in there as well. But let's take a quick look at some of the data that was released this week. Today, we did get that producer price index. The markets are really on the lookout for signs of inflation. And that, of course, in turn is going to impact interest rates. So we did get that PPI number today. It was up about 0.5%. A pretty big increase, but a closer look at certainly employment numbers and elsewhere had people not as put off by that continued increase in producer prices. So weekly jobless claims, they did rise less than were expected, but we still are at a very relatively high unemployment rate. A 10-year treasury yield, again, that continues to be the focus. We had a reprieve yesterday, but strikingly came back into play today. So we will look at the impact at that as we go through today's show. Also, consumer sentiment, it rose to the highest level, taking us back to last March, pre-pandemic levels. So that is quite compelling. Of course, stimulus checks due to arrive this weekend for many individuals. And then, of course, Brent oil prices. Those of you that follow my show each week, you'll know that I have been talking about oil prices, but more importantly, energy stocks since last fall. So the vibrancy there remains very much in place. So let's go ahead, take a look at those markets, get a feel for where we are. We're looking at a daily chart here of the S&P 500 of the broader market indices. It was down the least, but I should mention that it was up 2.6%. So nothing to be too disappointed about. Pointing out here, this particular chart went out with my midweek MEM Edge report on Wednesdays. And what I was pointing out at this juncture was the fact that on Wednesday, we did have the S&P 500 break back above each of its simple moving averages in an even more bullish move. We had already highlighted the S&P last week in our weekly report, and then on Wednesday got a continuation rally and further confirmation that the markets are in a confirmed uptrend. Your outside momentum indicators trending upward and above that net neutral 50 area. So let's go ahead because always we want to get a little more as far as information. It's good to know that the markets are generally in an uptrend. I don't know I'll have time to look at the NASDAQ, not as healthy, but let's take a look here at the sectors, the underlying sectors here within or among the broader markets. And what we can see here is what I've done is we're looking at what's called a candle glance view. So it's a 2-month chart of each of these sectors, a daily 2-month price chart. And then what I do here is go ahead and add an RSI indicator. That's your relative strength indicator, and sort that by descending. In essence, we want to uncover where the relative strength is here. So your strength is going to be up here in this upper left quartile relative to your weaker areas down here in the far right. So what we can see here is quite simply energy still at the forefront. This I'm going to pull up a daily chart, but we did start the show by talking about the energy and oil prices up there at that 70 level. Boy, if someone had told me that when I was first covering this area, again, we did get into energy back here. We did have it actually in January. Oil prices shockingly got up to $50. We're not looking at oil prices here. We will in our next portion of the show, but certainly you can see this super confirmed uptrend occurring here among energy stocks continuing to remain in place. From here, financials. So take a look. Energy, financials, industrial, three horsemen, as I like to call them. More recently, we had different horsemen prior to February, but here we are. This is all about the economy recovering and that rather swift rotation into some of these recovery areas. From here, we can see real estate. I mentioned these REIT stocks, top performers for the week. As we can see, a lot of these are going to be portfolios of hotels, apartments, and residential apartment. So certainly the concept that individuals not only will be congregating more as far as the hotel space, but also the default rate as far as apartment REITs with occupancy rates and so forth as individuals' employment will gain and the vaccine takes more traction. So beyond that, we can then move on to some of those weaker areas. Healthcare has been weak for quite some time, but really much to my dismay, because my work, of course, is centered around growth stocks, getting in front of growth names. We've had a tremendous nice run in healthcare. I'm sorry, technology, but we can see that tech stocks did peak here in late February, and this is when interest rates did begin to arise. Actually, they did break 1% in January. That was your initial warning sign. We had that late January pullback here, but we can see that the damage is really quite a bit more as interest rates are well beyond 1%. They're up at that 1.6% level. So it is creating a real heaviness as far as tech stocks really being able to resume their leadership status. So very, very much in the weak area here this week. So let's go ahead and drill down a little bit further, because of course, as usual, we want to get even beyond this surface view, if you will, take a look at some of these sub-industry groupings in the markets. So what I have here are each of those broader market indices, small cap stocks as well, and then some of the areas that are going to give you a really good sense of whether we are in a risk on or off market. So I have biotech names in here, two of the recently leading tech areas, software and semiconductors. We'll take a look at that 10-year yield. Oil prices, bank stocks are very impacted by these interest rates, and then transportations. That's transports are viewed as a recovery area, cyclical as well. So as usual, RSI descending. Gone ahead and updated it here. So what we can see is that significant leap that we have seen here over the last 2 weeks. And then even certainly, as I mentioned, from February on, we've seen a very significant uptick here. This is all about investors fearful that the economy is going to overheat, that the recovery is really picking up steam. And we are again up here at that 1.6 level. So I'm pointing this out because there is a domino effect with these interest rates. And of course, we talked about technology, but then there are areas that will gain from higher interest rates. And here we are. This is KRE, the Regional Banking ETF, very much in a confirmed uptrend. This is another area with my MEM Edge report. We got into bank stocks back here. One of the names on our list is up triple digit. Others are also doing quite well, but they remain in these confirmed uptrends. So really vibrant area. And I would argue if you have not gotten into bank stocks, it is not too late. This is an area you can go back to. The reason I got into this was taking a look at that 0809 bear and looking at those recovery areas out, and they can extend their gains for a very lengthy time. So definitely you're not too late getting into bank stocks. So from there, transportation, I mentioned to you, that is a recovery area. So here we're looking at the Dow Jones transportation averages, nice uptrend here. We're seeing this week trucking and other transport related stocks as the economy is gaining more ground. And Brent oil, of course, we talked about that. We'll just take a quick peek here. Brent oil is a widely followed futures contract, and we can see up here close to that $70 range. So we've had a significant increase from that January period. This is another area that, again, I mentioned that from my work, we were able to get into it back last fall, but still has legs. It's only recently that institutions have embraced this really significant move into energy stocks. So take a look here. We're going to look at the Russell 2000 small cap. This is a risk on area simply because these smaller cap stocks will be more volatile, and they will respond certainly more to the concept that potentially when interest rates started to rise. But all of that has receded because the focus here is now more on the recovery side with small cap stocks, another area that benefits coming out of a bear market. See if there's any other areas here that we should certainly, yes, absolutely. We need to take a look at software stocks. Big winning area for, again, my work, my MEM Edge report. We had many big winners out of here, but of course, as they break down and have been broken down, we began removing them. But more recently, we can see a recovery attempt there. Those of you that are subscribers that are watching, hello, you know that we're on the prowl for that reversal because the growth prospects are still very much in place. It's just that interest rate fear that is dampening the near-term prospects. So let's go ahead and take things, if you will, a little bit further. What I'd like to do now is go ahead and share. This is a quick view of that NASDAQ, what we're on the lookout for. I'm going to be talking about that more over the weekend in our report. But what I did want to do is take a look at some of those Dow components because the Dow is hitting a new high, and certainly some names under within that index are going to be driving the Dow index higher. So I'm going to do this by the stock's weight within the index. So as you may know, the Dow Jones is not a market cap weighted, but it is otherwise weighted. So here we have the United Healthcare. It's 7% is the weight. So it is the heaviest weighting among the Dow Jones Industrial Average. And we can see that it's having this nice downtrend reversal here. The stock is up above each of its shorter term simple moving averages with their outside momentum indicators trending upward and above their 50. So the reason this is still is attractive to me, despite the fact that it's had a pretty significant move already, is that we are bearing down on this 365 base breakout, which could in fact lead to higher highs. Let's take a look at another underlying stock. Certainly Goldman Sachs is the next biggest weighting. I didn't particularly intend to take a closer look simply because the stock is already kind of up and out. We've had this nice uptrend. It is, if you own it, it is still trending upward, but we are a bit overbought. Another name that was more compelling might not be ready for prime time just yet, but Home Depot is the third largest as far as component. It's 5.5% of that Dow. We can see it's had a really tough period here of late. It was a big winner for us out of this bear market as people really focused on improving their home settings due to lockdown, but it's waffled quite a bit since then, and then more recently broke down. But this past week, we did see the price break back up above all of its simple moving averages. And then with that, we did get this nice MACD black line up through the red. That is a signal that this either pullback or consolidation period has turned upward. And then we also have a positive RSI. So definitely for those of you that are looking at potential turnaround candidates that could be of interest. Boeing is hitting a new high, and this particular stock, of course, they came out today with news of yet more jet orders of their 737, and we can see that earlier in the week, Wednesday, we got this classic, just beautiful base breakout here, big volume, and the stock is continuing to advance on big volume. And that is something, if you are getting into a stock after a base breakout, these volume characteristics should give you confidence that there's further upside. Now we are overbought up here, but definitely you'll certainly at least want to be aware of that because aerospace defense was a leading group this week. And so moving right along, I'm going to move down because there's lots more that I want to get to, but Caterpillar, of course, a bellwether industrial name. This is one that my subscribers are certainly aware of. Had a nice base breakout this week, and then today we're getting that nice MACD crossover, indicating further upside. Take a look at that volume. We'll go ahead down a little bit further here and take a look at HON. This is Honeywell within that Dow Jones Industrial Index, another stock really nicely poised to break out of this 2-month base, just now getting positive momentum indications here. And the company provides products to aerospace and auto, two very vibrant areas. And then I'm going to take a look at one last name. It's a lower weighting, only 2.5%, and but certainly bears a look at. But we are awfully early. This is Walmart, and earlier I did point out Home Depot and its downtrend reversal components. We are not quite there. The only positive thing I can point to here is this MACD crossover, which can be an early signal. So definitely put this one on your radar. It really fell out of bed here of late, but we could at some point see a more pronounced downtrend reversal take place. We're going to take a brief break here, and when we get back, lots more to cover. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. Let's go ahead here and jump into some of these smaller cap stocks. And again, noted earlier, you can see this nice significant downtrend reversal, breaking out of a base, hitting a new high. This is the Russell 2000 index. And we're just now getting this nice MACD crossover. So from here, I'm going to share just a couple of names that certainly you can be aware of. I did choose stocks that are in what I call vibrant areas of the market. These are going to be areas where, again, my MEM Edge report, we have the leading stocks in these given areas. We're looking here at Hovnanian Enterprises, again, one of the smaller home builder stocks. Now, certainly you're not early by any measure, but it does bear certainly being aware of. For those of you that may not have noticed, the stock did come out with their earnings here. Their fourth quarter was 284% higher than that fourth quarter last year. But I'll tell you what, the stock is trading, their multiple is their price to earnings ratio is at 9 times. So it's really being talked up as still a value play, but it does have those really strong growth prospects. So something to note, I would be on the lookout for a pullback, but certainly worth keeping on your radar screen. Let's take a look at another stock that's in a very vibrant area, and that is TMST. It is a smaller steel stock. I'm going to start by sharing with you a chart of US steel, and you can see just how big a week this particular group have. This is a basic material recovery play poised to break out, big volume. So now we're going to look at a smaller name in that same space, TMST. And this, again, is not particularly early, but they do provide steel to the auto industry, which is a very high growth area. So certainly in nosebleed territory, but worth pointing out. Another one that is smaller, and you'll see this, for instance, I'm going to share with you an energy, a drilling stock. And a lot of these drillers are smaller just simply because are recovering from a very tough period. This is RIG, Transocean. And this big bump here on Wednesday, there was a new oil discovery in the Barents Sea in Norway, and the discovery was uncovered using Transocean, using RIG's drilling equipment, so the stock did pop. Looking interesting. A stock I've highlighted here in the past. This is a consumer discretionary name, small cap, sleep number SNBR, but it just continues to power to new highs. Pullback here, but it's still in a confirmed uptrend. We could see more near-term upside there. Another name that we can take a look at here, also consumer discretionary. This is Children's Place, PLCE. And this company really has come through as far as they are a retailer of apparel for children, as the name implies. But they really have turned things around with, in particular, their digital sales. They are reopening brick and mortar stores as well. But we can see that the stock had a nice base breakout this week. Momentum indicators turning positive. So one for the radar screen for you guys to keep on your radar, if you will, if you're on the prowl for participating in the small cap space. Let's move on here because I did mention to you the concept that a number of areas among the REIT stocks are really outperforming. So what we're going to do here is go take a look at the sector summary for the week. Rather than just jumping right in, I want to share with you how you can uncover where the relative or where the strength has been. So this is the weekly return this week. We can see REIT stocks really on the move. I'm not sure if I pulled up the group, but pretty sharp reversal here, but it is hitting a new high. And so then from here, you can then uncover those areas that, but you can see quite a lot in the way of vibrancy. So we're going to drill down, take a look here at some hotel related REIT stocks. First up here is Park Hotels, PK. And what you can do on StockCharts.com is go ahead down and request what's called a full quote. So I'm going to go ahead and do just that. From here, we can see what the yields are. This particular stock, not particularly high yielding, 1% yield, but it is breaking out of this nice base. And this company is the largest publicly traded REIT stock for hotels and resorts. They do a lot in the way of premium resorts. And so we're seeing that it is, again, poised to break out of this nice base here. And then your outside momentum indicators are positive. So what I did is I cherry picked names among those hotel REITs in different spaces. Next up is a company that is all about luxury hotels, Xena, XHR, and it's Ritz-Carltons and stocks of that nature. And we can see that they already had been doing well during the month of February. The company had opened all but one of their locations. They only have 35 luxury hotels in their portfolio, but by the third quarter. So we can see that another name that is breaking nicely out of that base, one last name in this hotel REIT space is APLE. This is going to be mid-level hotels, only rooms focused. This particular company does not support big groups and that sort of a thing as far as having conferences, but there is an anticipation that leisure travel is really going to pick up. So this is an area that would benefit. Also, we can see it's breaking out of this nice base. Let's move on, take a look at some residential REIT stocks. ESS first up here, West Coast multifamily residential, big move today, but we can see that it had that nice base breakout just now, that MACD crossover, nice volume characteristics. Next up is the largest owner and operator of apartment communities. I've written about this company in the past. This is AIV. We can see that nice crossover just taking place here and on its way to a nice 2-month base breakout there. One other name here on the residential side, NXRT, and this particular company is, they have well-located middle income residential properties, and another base breakout candidate here, a little bit smaller. And then I do have a few minutes here left. We can take a look at some specialty retailers, and a couple of these that cropped up as looking interesting are in the medical space. There's anticipation that elective surgery will pick up and that kind of dynamic. This is Ventas, VTR, a well-established name in the medical healthcare space, a nice 3.4% yield. And we can see that it's in a nice confirmed uptrend. Another one that is in senior care, senior housing, as well as post-acute housing is WE, I can type here, WELL. Another well-known stock in the REIT space is Welltower, having this nice base breakout here, another nice yielder here with 3.6% yield. And then last up outside of this specialty is shopping. And so I can see here we have SPG. Simon property setting up really quite nicely. This company specializes in shopping, dining, and mixed use properties. So we can see that it's poised to break out here. And then that nice 3.2% yield. So that's pretty much it for REIT stocks. I did want to take a quick minute. I feel that we have to look at Tesla because it's such a dominant weight in not only the NASDAQ, but also the S&P 500. And we can see that Tesla really has deteriorated with many of those high PE, high growth stocks. With the higher interest rates, it certainly pretty much fell out of bed here. Big volume on that downside, stock very much under distribution. But and this you are going to be seeing in a lot of the recently strong alternative energy stocks and other high growth areas. But what we're seeing here is that Tesla on this daily price chart is finding resistance at this downward trending 21-day simple moving average. So we're going to be on the lookout for a break above that. We are in the throes of a reversal on the MACD, but the RSI is not positive. I'm going to leave it at that. For those of you that want to be more tuned in to the markets, alerted to when it's safe to get back into growth stocks, and then be also put in front of some of these really high performing energy, financial, and industrial stocks. Take a look at my MEM Edge report. I have a special trial happening right now for 4 weeks for $7. You can use that link down below. And for everyone, have a wonderful weekend. I'll see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.